Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to Chart This with Dave Keller. It is Thursday, July 17th. We're hitting you a little bit early today, 4:30 p.m. Eastern, 1:30 p.m. Pacific. We're coming to you from a beautifully hot and somewhat uncomfortably humid Boston, Massachusetts. We moved to the Pacific Northwest almost 6 years ago now. I had not realized how humid the Northeast gets in the summer, even though most of our adult lives from 2000 to 2016 were in the New York and Boston areas. We moved to the Seattle area and experienced comfortable summers with very low humidity. Coming back to the New England area in the summer just reminds me how humid it gets. It is still absolutely beautiful, though. It's been a great day walking around Boston, doing some things, meeting some people, and enjoying my time here. Driving up to New Hampshire tomorrow to meet someone and go to board meetings and enjoy the weekend here before I head home, actually on Sunday. But hope you're well, and thanks so much for joining me again. Thanks for being flexible this week as I just aggressively move the kickoff time for the show whenever I can fit it into my schedule. I have a dinner that got moved up, and so I had to get this going, so I have time to get out to the restaurant here. Market conditions not bad today, right? Decent update for stocks. We've got Netflix reporting earnings after the close. Initial reaction appears to be pretty decent. We'll see what the price is actually doing. But the headline I saw was a nice win on the earnings side. So we'll look at Netflix and many others as we get to our market recap. As a reminder, we are streaming live from a hotel this week, but we are streaming live on Facebook, LinkedIn, YouTube, and X. I appreciate you guys tuning in live. If you're able to do so, please ask questions as they pop into your head as we're talking about market conditions, as we're looking at the heat map, as we're looking at individual charts. Any question is fair game. At the end of the episode, I like to take a question or two before we close for the evening. Tomorrow on Friday, July 18th, we'll be doing an all mailbag episode. And if we don't get to your question, we might be able to feature it in the show tomorrow. I like to spend a little more time being a little more thoughtful and deliberate about some answers to do the show on Friday. So we'd love to answer one of your questions there. Pop them in as we go in the live stream. Or if you're watching the replay on our YouTube channel, put your questions there as well. We'll gather all of those and hope to answer yours tomorrow. All right, looking at the major averages here, you can see the S&P finishing up by about 0.5%. That's just below 6,300 going into the close. We are within a rounding error of previous all-time highs for sure. The NASDAQ composite up 0.75%. Mid caps, small caps up the most. The small cap S&P 600 up just over 1% today. Small caps have been chronic underperformers. Again, generally speaking, in 2025, off of the April low, most time frames you would slice and dice 2025. It's been large over small. Still waiting for that to change for sure. But it continues to be large over small. Today, small caps getting a bit of outperformance here. The VIX remaining quite low, trended lower through the course of the day yesterday, and it was on a Trump comment about potentially firing Chair Powell, I believe. The VIX spiked up to around 1950. It quickly came back down as those rumors were sort of negated. And I guess those comments were tempered a bit. So lower volatility, just above 17 as of yesterday's close. Today, drifting lower through the course of the day to around 1650. Looking at some other asset classes here very quickly. Interest rates, you can see generally higher today. The 10-year yield, not by much. I mean, this is tiny movements that we're talking about. 10-year yield basically finished where we started. Same with the long bond yield, right about where we were yesterday. I don't want to spend any more time with that. Bonds basically flat for the day. Now, bonds basically opened stronger, and then as stocks rallied through the course of the day, bonds actually came in. So the TLT basically unchanged for the day. Dollar slightly higher, not by much, 0.4% to the upside. Looking at the commodity space, generally commodities were high, but that was really driven by energy prices more than anything. Crude oil prices pushed to the upside. Gold was down, silver was up. We've talked about that silver over gold ratio, how it's been favoring silver in the month of July. That's continuing today with the SLV slightly higher, the GLD slightly lower. Still own a decent position in the GLD and the IAU in my own portfolios. At some point I will make a point of adding silver, or maybe reallocating some of that gold trade into a silver trade. I think that's justifiable here. Crude oil prices, I mentioned, stronger. Energy, not the strongest sector today. It was actually middle of the pack when we looked at the sector returns here in a minute. Bitcoin, Ethereum, both in the upside today. Bitcoin up about 0.5% today. We're currently right around 119,250 or so. We have briefly touched the 120,000 range a couple times here in the last 24 hours or so. Ethereum prices even better. A number of my interviews recently on the Market Misbehavior podcast, cryptocurrencies have come up. Now, one was very much intentional. I had Adrian Zadunchik, who was an early crypto pioneer, talk to him about his take on Bitcoin and other cryptocurrencies. Just yesterday, or actually this morning, I want to say, I released the latest episode of the Market Misbehavior podcast with Mike Singleton. Mike is the chief analyst at Invictus Research, based here in the Boston area, actually. And he actually offered up Bitcoin, and we talked about that in terms of institutional adoption. And he spends a lot of his time working with institutional investors and giving them insights in terms of macroeconomic data. And he actually talked about and I asked him about just sort of the evolution, like where we're at in that cycle of adoption from no one would touch it with a 10-foot pole to everyone has to own it in their institutional portfolio. We're somewhere in the middle, like where are we at? And what does it look like from here? And I really appreciated his insights there. So make sure you check out both of those latest episodes of the Market Misbehavior podcast. As always, super interested to know who you'd like us to interview as part of that series. So drop a comment during the show, drop a comment on our YouTube channel afterwards, hit me up on Twitter with a direct message. I'd love to hear your thoughts. All right, looking at the 11 S&P sectors, financials, consumer staples, industrials, we'll put technology in that top 4 list, I guess. All sectors up between 0.9 and 1% today. Those are your leading sectors. Good to see financials at the top of the leaderboard because a number of banks kind of struggled here through earnings week. Consumer staples number 2, which is actually a pleasant surprise. Staples have not been particularly strong, have consistently been underperforming the consumer discretionary sector, which is more traditionally offense. So some nice upside movements there. Industrials and technology, which are basically tied for third. I mean, these are the 2 strongest sectors in the month of July. They're really, at this point now, the only 2 sectors showing strong relative performance characteristics. The rest of the 11, so the other 9, underperforming or flat, right, in the month of July. So it's really concentrated right now in in technology and in industrials, the 2 sectors really getting it done on a relative basis. On the downside, I meant to say 2 of the 11 S&P sectors down. Healthcare down the most, just over 1.1%. Breadth conditions, another good day here, right? You can see the advanced decline data here all in the green. On the New York Stock Exchange, 2-to-1 ratio, stocks up versus down. That's 67% advancers. The S&P 500, about a 3-to-1 ratio, 75% up, 25% down. Good numbers, right? And earlier in the week, we had some weaker breadth data. Some of our short-term breadth indicators like the McClellan oscillator pivoting to more bearish configurations. But a couple days now, we're actually seeing some decent breadth. We'll see how what this means going into next week as we really get into the meat of earnings season. This week was basically the beginning. Next week is when we start to get more growth stocks and others all reporting. In terms of today's movements in the Magnificent Seven and Friends, this list of growth leadership names, you have Broadcom up 2%, Netflix up 1.9%. That's going into today's, I think, very important earnings report. First one on this list reporting earnings here in the Q2 season. Microsoft, number 3, up 1.2%. NVIDIA had a decent day as well, up almost 1%. 3 of these names were down. Tesla continuing to be a downside outlier compared to the rest of the Magnificent Seven, down 0.7%. Meta, which is more and more flashing what looks to me like a big double top pattern, down another 0.2%. Not a horrible day, but just not able to follow through on this attempt to break to new all-time highs. And then Apple basically flat for the day. And those are your bottom 3 within that group of leadership names. All right, we will continue on looking at the market carpet, a heat map style visualization Appreciate some of the questions that I'm seeing here on X, on YouTube, on Facebook, on LinkedIn. Please keep the questions coming. I already see some really interesting ones that I'd love to dig into. We'll try to grab one or two here today before the end of the episode. Anything we don't get to, we'll put it in the mailbag. And again, all mailbag episode tomorrow, so we'll be able to take some time and dig a little bit further into those scans. All right, so the heat map, let's take a look here. So, initial reactions, a little better than yesterday, right? But yesterday was a little flatter, and the green and the red kind of really jumped out. Kind of the same thing here today, but I think the average color feels a little more into the green here, particularly in technology and financials, which are now the two largest sectors, or the two sectors on the left side here. Average color kind of green here, and I would say particularly in the financial sector, it's good to see names like Citigroup making new 52-week highs, names like KKR, which had pulled back a bit, rallying higher, Blackstone with a nice upside move, and then others like JP Morgan and Bank of America, which had pulled back this week on earnings, actually having a nice update today. So, starting to recover a little bit here. I'm struck looking at charts like TRO. This is one, right, just getting back above the 200-day moving average. I don't often look at, there's a set of breadth indicators you could create looking at the percent of stocks above their 200-day moving average by sector. Interesting data series to get your hands on if you can do it. I wouldn't be surprised, like in the financial sector, if that number is really starting to rotate. Call that like the the bullish moving average percentage, I guess. So TRO finally getting above its 200-day moving average for this week. It's basically stalled out right below it, and then today finally powering above there. So financials were looking kind of wobbly earlier in the week, now starting to regain some upside momentum, which I think is super encouraging as we wrap up this week, where many of these stocks have all reported earnings here. So obviously some nice runs in some of these names, some of them like BK and others making new all-time highs, and certainly impressed with the follow through. Micron, kind of a negative outlier. I did grab that chart to focus on in the chart review portion. We'll talk about that a little bit. Bit of a pullback here, which is sort of different than the average technology stock. You can see names like Oracle just kind of blowing through resistance and making new highs. NVIDIA, Broadcom, these are all stocks making new all-time highs again today. So the strength in technology has been, pretty hard to ignore here in 2025. Certainly off of the April low, it's been technology and then everything else. And specifically in the month of July, that has really been the case. Very few sectors outperforming the S&P in July, but technology is one of those consistently getting it done. The way I read a market like this is get nervous when more of these names look like Micron, right? Micron looking vulnerable here, right? Starting to pull back, maybe break some initial moving average support, maybe making some new swing lows, but the average technology name, and some of those leadership names just looks remarkably strong. And so more Micron type of charts would get me nervous at this point. It seems like an isolated issue. I mentioned the strength in consumer staples today. Pepsi is an earnings name, having a pretty decent move today, up about 7.5%. You can see Coke also bouncing off of support there. The sector's still struggling in such a big way. So I not a sector I'm particularly excited about. Charts like Costco, at one point, I'm thinking, late 2024, it was hard to find a better, more consistent uptrend than Costco. And other big box retailers at times have been remarkably strong, but all of these are either breaking through support like Costco or actively testing support like Walmart, hitting that 95 level from above. So I think questionable trends there. And then finally, I'll say if you pick a random chart in industrials like Trane Technologies, like Eaton Corp, and cover up the ticker, and I ask you to guess the sector, you probably guess technology. Don't neglect that value-oriented sector. Don't think this market is just driven by growth leadership and that's it. Chart like Howmet looks like an internet name right now, just with a consistent uptrend and just sort of brief pullbacks and then resuming the uptrend, onward and ever upward, as I like to say. So technology and industrials, those are the juice right now. Those are the two sectors I think are very much worth overweighting if you're thinking about your allocation. That's certainly where I would be focusing my attention. One other comment would be within healthcare. A couple of the big healthcare names dropping quite a bit today. Abbott Labs is down about 8.5%. That's an earnings name. I did grab that to look in a little bit further. Absolutely looking vulnerable. A lot of biotech names and others have been struggling here as of late. And names like Stryker just like trading up to resistance but failing to get through. So healthcare not really a great sector, and today certainly feeling some weakness in a number of different groups represented there on the heat map. All right, shall we continue on and look at some charts here together? The daily chart of the S&P 500 looks pretty good. Continues to look good. We highlighted on Tuesday's episode the bearish engulfing pattern, pretty clear with an up day and then a down day. Yesterday, I hesitated to label it, but it's probably more like a hammer candle, right? Because you're sort of pulling back. You're in the lower end of this little range here. But I would say, generally when I see a candle like that, I think more optimistic because you have a pullback and then you rally into the close. And sure enough, today kind of following through on that bounce and moving higher. So the way you read this week, I think, is the same way you read charts like NVIDIA and others. This is a chart in a primary uptrend. I define that in a couple different ways. Number one, higher highs and higher lows. That's what we're getting with another intraday high, new all-time high, new closing high today. We're above upward sloping moving averages, and the moving averages are all in the proper order. We have the price above the 21-day EMA, the 21 days above the 50-day, the 50 days above the 200-day. Get nervous when that configuration is no longer the case. And that's where charts like Micron, we're starting to break down through the 21-day EMA. Makes you feel like maybe that is changing, right? That trend is in question. But for the S&P, I don't think it's questionable, right? For now, while we can argue as to what could cause risk assets to go down, they're not going down today. And again, as long as that pattern continues, as a trend follower, I'm very happily following this trend higher. I own plenty of stocks in my accounts, not changing that until the chart tells me it doesn't deserve it anymore. In terms of question marks, we've highlighted recently how some of the breadth readings have come down. That's still the case. That hasn't really changed much yet, with things like the bullish percent index coming out of extreme levels. Potential divergence here in the month of July with higher highs on weaker momentum. We had that in May and June, did not stay much because very soon in late June, we broke out on stronger momentum. That negated that divergence. Do we get another divergence here in July? Potentially. We'll have to see how long that plays out. All right, sentiment data for the week usually comes out on Wednesday into Thursday. So Thursday's episode, great time to check in on some of the sentiment data and just see where it's at. Here we can see that the AAII survey, which is a weekly survey of individual investors, basically asking, are you bullish, bearish, or neutral on stocks for the next 6 months? And then every week it's updated on the latest response. For 2 straight weeks now, we've had a steady decline in bulls. We're down around 39%. For the second straight week, we've had a bit of an increase in bears. We're right almost exactly at 39%. So you can see the spread between the two is negligible, basically zero. What happened through the course of 2025, you had very negative breadth right around the February peak, really through the April low and beyond. It actually lasted about another month after the low while the sentiment was still very, very negative. And then it flipped much more positive in a very short period of time. 2 weeks ago, we had a big spike where the bullish reading went, up quite a bit to almost 50% bulls. Not quite there, it's around 46, 47%. If I remember right. And now over the last couple of weeks, kind of settling down a little bit. So what that means is as the market is kind of drifting higher here in the last couple of weeks here, first couple of weeks in June, we're actually getting less and less bullishness. So individual investors in this survey starting to be a little more skeptical, even as the S&P is making new all-time highs. The name exposure index, which is a weekly survey of money managers, ticking down slightly, not by much. It was around 86% last week, around 84%. Not much of a change. 2 weeks ago, we were at extremely euphoric levels. So again, as the S&P is drifting higher in the month of July, less and less optimism in terms of the positioning. It's still overall pretty good. I would say a healthy allocation at about 84% is pretty much slightly above the average reading over time. But watch to see if it continues to drift lower. That would imply that money managers in that survey are getting more defensive. Not much to worry about just yet, I would say, sentiment-wise. This is looking at the relative performance of 3 key sectors: technology, industrials, and communication services. I just wanted to point out those top two sectors. As I mentioned, this is the month of July here, just the very last part of this. You can see technology outperforming, industrials outperforming. All the other of the other nine S&P sectors look kind of like communication services. Communication services was actually a market performer so far in most of 2025, but July has shown real relative weakness, and most of the sectors look kind of like communication services in July. They're starting to really underperform. But technology, industrials, the two strongest sectors. If I'm focusing my attention on leading sectors, those are the two I would be focusing on in scans and looking for potential ideas. To finish off, let's look at a couple individual names here. We've got some earnings to talk about, and we'll look at some of those charts, check in on some after hours trading here in the early hours of after hours trading, and see what happens. Micron is not an earnings name, but it is a chart that's starting to break down a little bit. Again, within technology, the average stock looks pretty good. The breadth in technology is pretty strong. The relative strength is certainly significant. Micron looks like an outlier in that it had been doing very, very well toward the end of June, but then started to rotate lower. You have this big bearish engulfing pattern, which ended up being the intraday high around 130. From there, we bounced a bit off the 21-day EMA, but this week we're really accelerating below that level. So all of a sudden, things are not necessarily in the proper order because the price is below the 21-day EMA. This is where the 50-day moving average becomes a really important level to watch. I will say a couple things to look for in the chart of Micron, right? This could be a very viable dip before the next move higher. If that's the case, we're right about near the point where I would expect support to come in. So we've got the 50-day moving average. We have the first Fibonacci support level around 104. We have the RSI just testing 40 from above. So if we are bouncing here from Micron, we're kind of right at the point where you would need to see that. Otherwise, we break below the 50-day, RSI breaks below 40. In my opinion, that's sort of an all bets are off, get out of the way kind of signal for. So this is sort of that tactical point where if it is a buyable pullback, it's right about that point where I would expect that to start to take hold. Netflix, decent update going into earnings today. Let's take a look at what's happening after hours. I saw someone drop a comment. It looked like it was down a little bit here. I mean, not by much, right? I mean, down 0.8% here. Now, that could have fluctuated quite a bit. After hour sessions, you have to remember a lot less volume, a lot more volatility, really, really hard to get a reading on it. But it's the best we have to sort of gauge real-time reaction to the initial earnings report. Once the earnings call actually starts, this is where you'll get a lot of movement as analysts are asking questions and investors are with a fine-tooth comb looking through the responses that company management will give. For now, not a huge update though, and the initial headline I'd seen was actually pretty decent quarter. We'll have to dig into that maybe tomorrow on the show. We can debrief a little bit more, and I would encourage you, as always, with earnings to go through some due diligence to make sense of things, but I would say keep an eye on that one going into tomorrow, because if Netflix ends up selling off tomorrow post earnings, that would not be a great start to the Magnificent Seven. Netflix, not the biggest name in that group. It's actually probably the smallest name within that group of mega cap leadership stocks. However, it still is an important name because it's a huge media conglomerate now. Content creator, but also a great read on the state of the union in the streaming world and what sort of trends. In my opinion, the market kind of is pricing in that companies like Netflix can just keep expanding and growing forever, right? It's sort of the issue with Apple, where at some point, right, everyone on the planet's going to have an iPhone. If the numbers that they're showing continue forever, like eventually everyone's got a phone, you don't need a new one. And so you have that capacity issue with these huge names. I think Netflix is basically being priced for perfection, right? That they continue to grow their streaming footprint, they're able to continue to throw out great content. At some point that probably starts to change, so we'll see what happens. But for now, post market close, Netflix appears to be doing okay, hanging in there. GE, an earnings name today, down about 2%. Bearish engulfing pattern that I wanted to highlight. That was an update yesterday. Today, a bearish engulfing pattern on earnings. That's usually not a great way to go into to sort of go through your earnings release date. Currently up about 0.2% in the aftermarket, but I'm concerned about that bearish engulfing pattern as we touch the overbought region. That usually suggests next 1 to 3 bars are lower. Abbott Labs, and again, I don't have in front of me whether they reported before or after, and I'm pretty sure looking at the chart that Abbott reported before the open today. Just wanted to address very, very quickly. I mean, the chart of Abbott has been kind of a frustrating one because going into this earnings release here in mid-July, we're coming off of what looks like a pretty decent double top pattern. Speaking of bearish engulfing patterns, just a perfect example of that at the all-time high for Abbott Labs as it hit 140 at the end of February, beginning of March, and then rotated lower. Now we gap down on earnings. We have closed below the 200-day moving average for the first time since July 2024. We're also testing the most recent most recent major low, which is the April low. So just like that, bad earnings release puts Abbott Labs below the 200-day and all the way back down to its April low. Now, this is where you'd probably expect some decent support because we're oversold, because we're closing below the 200-day, because we're testing that April low. That's where I would be. I mean, I would be watching that very, very closely. Would I take a position on something like this and ride it higher? I personally would not. I'm not a big fan of the falling knife kind of chart, which is what this represents. But if you're more of a contrarian trying to, play short-term weakness, I get the argument. This is the type of chart where I would keep a pretty tight stop, though, because a decline like this can be followed by aggressive sell-offs, as market history has certainly shown us. All right, flip that chart over kind of, and you have the chart of Pepsi. Consumer staples, actually one of the better sectors today. PEP gapping higher. Now, this one's testing its 200-day from below. So again, I'm excited about a chart like this if and when it can get above the 200-day. That's the breakout I would be looking for. It's in play now, and it was nowhere near the 200-day up until today's session, up about 7.5% after today's earnings. See if it can get above the 200-day. That's what I would personally be looking for. And I think that's pretty consistent with other charts as well. Albemarle is a specialty chemical name in the materials sector. Impressive rotation from what I call a distribution phase to a consolidation phase, right? Down to sideways, and from consolidation to accumulation, higher highs, higher lows. Now we're getting back to the 200-day. The last couple times we've tested the 200-day, it has not gone particularly well. That's why with a chart like this, I think it's a trade below the 200-day. I think it can become an investment if we can get above the 200-day, representing or confirming that there's enough buying power, enough optimism to fuel further gains beyond what we've seen so far. So keep an eye on a couple of those names testing their 200-day moving average. All right, I do see some great suggestions for the podcast. Sven Henrik, Heinrich, I forget how to pronounce his name. Urian Timmer, I have had on the podcast. Would love to have him back. David Hay, I actually don't know. Thanks for that. I'll take a look. I do know of Stan Weinstein. Would love to get someone like him to have a conversation, see what I can do. I'll have to reach out through some people, but we'll see what we can do for sure. All right, let's take a question or two. As a reminder, we won't be able to get to everything. Lawrence McDonald's another good one. Thanks for that. But any of the questions we don't get to, we will put it into the mailbag, and maybe tomorrow we will answer it. Ruben, thank you so much for your question. I see that you're from Spain in your earlier comments. Buenos tardes, I guess we would say. Actually, buenas noches. It's very late in Spain as I think about it after dark. But thanks for tuning in the evening hours for you. You asked, I noticed that you never use Bollinger Bands. Any reason? I'm a big fan of Bollinger Bands. I've gotten to know John Bollinger over the years. I've enjoyed so much talking with someone like him, and one of just the legends in the industry, and someone who has, encouraged so many, including me, to learn about technical analysis, to educate people on technical analysis, and speak to its benefits. And John was one of the early people to do that on TV. I mean, he was one of the first sort of television practitioners. John Bollinger, John Murphy are kind of the two early chart guys on consistently on things like FNN talking about charts. Bollinger Bands are fantastic. And I will tell you, the only reason why I don't use them is because there's only so many things I can look at on a particular chart. And for me, price and trend and moving averages are so important. Bollinger Bands, for me, are not kind of that primary thing I would look at. However, for me, after that initial assessment, right, if I look at a chart, what you're seeing with Albemarle is sort of my standard go-to chart, right? The price, the moving averages, RSI, which is a measure of momentum, relative strength, which is a measure of relative performance. That's my initial assessment. From there, I start to look at other indicators depending on what I see, right? So if I see things start to rotate, maybe I'll look at volume indicators like Chaikin and money flow to see what the volume has been. And does that help me better understand the dynamics of the move? If something is more range bound or consolidating, that's when I start to bring up Bollinger Bands to see what they tell me about volatility and looking for potential breakout levels. So, the other thing I would tell you is Bollinger Bands, I think, are ideal for certain types of trading. If you're a swing trader, big fan of Bollinger Bands. If you trade options, huge fan, right? Because as an options trader, you're basically playing volatility. Bollinger Bands are a technical indicator, literally trying to illustrate volatility in a meaningful way, right? So it's using technical indicators like moving averages, using statistical analysis like standard deviations to give you a trading band and a dynamic trading band based on the volatility of the instrument. So if I traded options, I would probably use them more often. If I see a chart that has a particular setup, particularly if it's more of a sideways consolidating type of chart, or maybe just starting to break out, that's when I would often bring up Bollinger Bands just to see what they can tell me about validating that uptrend or that breakout or not. All right. One final question. Walter, thanks for watching on YouTube. Does it make sense to look for divergences using the PPO as is the case with RSI? Short answer is absolutely. Divergences are one of those basic premises that works for a lot of technical indicators, any kind of like oscillator or anything like that, that you would put below the price. Looking for divergences makes sense. That means MACD. You don't really get a lot of divergences with stochastics, although you probably could, but it's not really based on the calculation. It doesn't happen that often, but RSI, absolutely. PPO and MACD, absolutely. And I think those are probably the ideal ways to see divergences. Divergences and other indicators. I mean, anytime you have an indicator, based on trend, based on momentum, based on volume, really helpful as well. So divergences where the price is going higher, but volume-based indicator like the accumulation distribution line rotating lower, super helpful. So short answer is definitely. The long answer is it just depends on the indicator. For certain indicators, it makes sense, but generally any kind of oscillator, any indicator you put below the price, divergences tend to be helpful. And I will remind you, when you're looking at divergences, remember that's an early warning system. That's a leading indicator. Don't forget to combine that with lagging indicators, right? Actually looking at price. So a divergence will tell you an early warning. The price breakdown will confirm that divergence was true. Don't use them independently, use them together. That'll do it for tonight. Thanks so much, everybody, for tuning in live. I'm so thrilled and humbled that many of you, given no warning of a change in time, are watching for the show to pop up. Can't tell you how much I appreciate you doing so and making the show entertaining as always. Thanks for your questions during the show. Please keep them coming. If you're watching the replay on our YouTube channel, drop some questions in there. We're planning an all mailbag episode. I'm actually going to be driving up to New Hampshire, connecting with my friend Larry Tentarelli, editor of the Blue Chip Daily. He's up in New Hampshire, so I'm going to say hello to him and then go to some board meetings at the Walden School, which is a summer music program in New Hampshire that I'm on the board of that I absolutely love. Excited to talk music. And of course, I'm on things like the investment committee, so I'll talk about charts with them as well, but more music than anything. Having said that, have a fantastic evening. Thanks so much for tuning in. And I'll remind you, it is always a good time to own good charts. Have a good night, folks.